Hello and welcome to the Global View on this Wednesday. I'm Andrew Geoghegan. Good to have you with us here at AusBiz. Let's take a look at how we're set up from movement on markets overnight. Fairly mixed, largely positive though in the end. In fact, European shares again hitting record highs driven by gains in defence stocks. On Wall Street, a bit of choppy trade there. In fact, I think actually all the major indices just finishing in the green at the end. That's as investors returned from a holiday weekend and also considered more earnings results. Mega cap and growth stocks were mixed. Nvidia leading the gains, while Meta dropped, snapping a 20-day winning streak. Intel shares surged on reports that rivals Taiwan Semiconductor and Broadcom are eyeing potential deals that could break the chip-making icon in two. Constellation Brands rose after Warren Buffett's Berkshire Hathaway disclosed a new investment in the alcoholic beverages producer. The retail giant Walmart's earnings are ahead this week, with it considered to be a bellwether of how the American consumer is faring. Now, markets are awaiting the Fed minutes from the last meeting due out tomorrow for further clues on the trajectory of interest rates. In the meantime, San Francisco Fed President Mary Daly has said policy needs to remain restrictive until I see that we really continuing to make progress on inflation. This follows comments from fellow Fed member Christopher Waller, who said, "My baseline view is that any imposition of tariffs will only modestly increase prices and in a non-persistent manner. So I favour looking through these effects when setting monetary policy to the best of our ability." On the diplomatic front, US Secretary of State Marco Rubio has discussed an end to the war in Ukraine with Russian Foreign Minister Sergei Lavrov in Saudi Arabia, without the participation of Ukrainian officials or EU representatives. Now, US Treasury yields have crept higher, the 10-year rising to 4.51% after the New York Fed's February Empire State Business Conditions Index came in at a stronger than expected, while the 2-year yield is around 4.28%. And in the wake of the Reserve Bank cutting its cash rate, the Australian 3-year government bond yield has ranged between 3.9 and 3.94%, with markets now pricing in a 20% chance that the RBA will cut by another 25 basis points at the next meeting in April, but an 80% chance by May. US dollar index is up on the day, the Aussie buying 63.5 US cents, and Bitcoin is trading around 95,000 US dollars. Oil prices have risen, although traders have been cautious amid talks to end the war in Ukraine, which could boost Russian supplies. Brent crude futures at $75 a barrel. Copper is down another 1.5%. Iron ore up 1% at 107 US dollars a tonne. And gold has recovered to rise more than 1%, with gold futures at $2,949 an ounce. Well, let's get across what we're seeing on the US markets. We're joined by Howard Silverblatt from S&P Dow Jones Indices. Howard, great to have you back on AusBiz. Thanks for joining us. Let's take a look then, those movement. Sort of seeing some of those intraday highs. How would you describe market breadth in particular at the moment, where it's been driven to?
In fact, year to date it's positive, but the last 4 or 5 sessions have not been good. We're actually negative this month on breadth, yet the market is up. It's not the Magnificent Seven, that's for sure, because they're just barely holding their own, but we did create a new high today. That's the 12th one since the election, the second this year. And it's all done in the last 10, 15 minutes of trading. Volume, even at the opening, when we first ticked up and then went into the red, was not that heavy, but it was at the end, and that votes for confidence in tomorrow, in the openings and what the numbers will be and what the politics obviously will be. So the market is very optimistic at this point in time. It just keeps going up. We're seeing that. We're negating to some degree all the tariffs and the negative news we're seeing, with the market feeling that it's just part of the negotiations and eventually reality will be different, and the market up. But again, last 10 minutes, heavy trading, and we set a new intraday high and a new closing high. All 10 sectors are up at this point. The consumer discretionary is still barely up about a little bit less than a half a point. on there, but again, up year to date, financials up almost 8%, materials up over 8%. So we are seeing the sectors move, but there's definitely losers out there. Again, breadth is starting to turn a little bit negative on here, but the market is still moving higher.
Yeah, just to that point of breadth, in fact, you're saying essentially the Magnificent Seven no longer in charge as such.
Not
In
at
fact, we
all.
saw Meta some 20 days of consecutive increases there, and that
Amazing.
finally has been snapped.
Yeah, and Meta's, even though it went down today, it negates Apple and Tesla, which are doing very poorly this year to date, and pulling it down. So that kind of negates it. The other ones, Amazon's doing a little bit better, but Meta, a phenomenal run, 20 days up. Speaks to inflows and a lack of buying. Today's slight decline still puts it ahead nicely for the year. Uh, but we're seeing that it moving farther into the breadth. Again, not as strong as we wanted to do. Earnings are definitely helping the market. At this point, we're seeing a record earnings for the quarter and record sales. Margins at 12.2% for the fourth quarter. The historical average is 8.5. I mean, companies are selling because consumers are buying, and they are making more on the bottom line at this point in time. And the estimates going forward, they've tilted a little bit off their highs, but they're still predicting highs for 2025 and 2026. The negative there, of course, is you're paying a 26 PE on today's earnings and a 20 based on 2026. So there's a lot of optimism in there. Consumers, for some reason, start to pull back, get nervous, sentiment turns down, inflation turns up. The market's going to have to react quickly, and there's a lot of gains built in here.
Howard, to the issue of tariffs and also government cost cutting, the market's looking through that at the moment. In fact, I mentioned there, hearing from Fed member Christopher Waller is saying we do need to look through it. He's not seeing any significant impact as far as tariffs are concerned. So are markets taking those policies from Donald Trump in their stride?
They are. They're taking it that it's a negotiation point. Up to now, it's the aluminum and the steel ones that are really the real ones, 25% on them. And we saw remarks in the autos how much that would hurt them. But Canada and Mexico have been postponed. And if there's progress, maybe they'll be postponed again. The other real one was China, which was 10%. Not a lot. China didn't retaliate a lot against the U.S. for that. So again, the street's seeing a lot of this as negotiations, and you cut your best deal. And the street feels that whatever that deal is going to be, we can live with the outcome as long as the economy stays strong. You got your first cut today. We don't think we're getting another cut probably until June here. At this point, if the economy stays strong, employment is good. There's still demand in there. So at this point, as long as the underlying economy and those earnings stay good, consumers spend, the market's going to continue going. And we're seeing inflows domestically still maintained. Not as much inflows from the foreign market. Foreign markets are doing well. Wasn't expected, but we're still seeing positive inflows into U.S. markets, and that's helping to fuel the uptick.
Meanwhile, and as you point out, the focus on capital expenditure at the moment, particularly this comes in the wake of DeepSeek, perhaps undercutting what we're seeing in the AI infrastructure space, and that on, of course, what we saw on Wall Street, bringing into focus just how much these companies are spending on AI infrastructure. What are we expecting to see going forward, though, in that space?
We're expected to see enormous expenditures coming in there. Without the AI associated expenditures, CapEx might be down this year. So it's being one increased into AI and diverted from other areas. And remember, one company's expenditures, another company's income. So we're going to see a lot on IT coming in here. The main question here is later in the year when some of these things start rolling out, companies are working on them now. So we're talking Q3, Q4. Do we see some productivity gains from non-tech issues that are incorporating this? We already see it in the insurance companies and algorithms, financial markets are using them a lot. are other manufacturers going to be able to utilize it? And so there's a lot of hope for higher productivity later in the year, which would counter any margin declines in case we get those because of tariffs and costs going up.
Howard, great to get across what you're seeing, particularly on Wall Street at the moment. Thanks so much for joining us in Dow Jones Indices.
Thank you. Have a good day.
Let's now turn our attention to what we can expect today locally. A marginally lower open there. Let's call it almost flat, in fact. And also the focus, of course, clearly been on another raft of earnings results coming our way. And we're going to get right across that in just a moment when we get to the open.